Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We have a couple of interesting aggressive growth stock picks here to tell you about. Well, Bill Wilton, our aggressive growth stock strategist, is going to tell you about them. I'm just going to sit here and pretty much listen. But one is STAAR Surgical, STAA, the ticker symbol.
Yep.
And this is, they make implantable lenses, right, for people with cataracts and stuff?
Yeah, it's an alternative to LASIK. You can actually implant a permanent contact lens into your eye. They also do offer, a replacement for the natural lens for cataract and glaucoma.
I remember when LASIK was the alternative to this.
Exactly.
When this was all you had.
Yeah. But, recently they did report quarterly results. They saw their net income go back into the black. They posted a pretty sizable loss last quarter. With a slight gain this quarter, their EPS came in at 2 cents. Not really blowing anyone's socks off, but it was a penny better than expected, and they did strengthen their balance sheet, bringing their cash and cash equivalents up to about $13 million. So they do have a lot of financial flexibility there. But one thing you will see when the earnings per share is that low, it's kind of tough to get good valuations on them. But they do have that Zacks #1 rank, and as long as their growth story continues to improve, the valuations, will eventually come into line as those estimates come up. It's just not going to be a value investor's pick for now. But what you can see is that they were incredibly defensive through that August sell-off that we saw. Shares almost doubled at one point while the rest of the market was tanking, and they are holding on to those gains fairly well, all things considered. With all the worries out there, a lot of people are quick to take profits. So this is a very strong play there.
All righty. Another one that you wrote about recently is Roadrunner Transportation Services, RRTS, the ticker symbol. Obviously, transportation company.
Yeah, and they do everything from less than truckload domestically to international air. So they run the gamut as far as the type of services they offer. Okay. They also do some just logistic services where they don't even provide, the actual transportation. Their earnings per share came in at 24 cents, which was a company record, also a penny better than expected. And, their revenues were up 30%. There was a couple other factors in there, a lot of higher input costs, things like that they're able to pass forward. But the main thing there was that they were still able to generate more new customers, so that growth that they're seeing is sustainable, even though they don't see the conditions improving. So they're a good steady business. Their management is very realistic and conservative, which is what you want to see in a very hesitant market like this. They also reported a $98 million acquisition of another non-asset logistics company just to expand their business. They're doing it well organically, but also through acquisitions. Right now, their growth rates are pretty extensive for the next couple years. Unlike STAAR, they do have pretty decent valuations here. The PEG ratio is about 1.2, meaning that growth is coming at a pretty good price here. And you can see their chart is a bit more volatile than the last stock, but they do have a good amount of upside if they can continue growing their business from within like they have been.
All right. Do you own either of these two?
I do not.
All right. Check out more stock picks on our homepage, Zacks.com. If you're not there already, we put 4 new ones up there for you daily for your consideration, and they are in each of the investing categories that we write about on the website. With Bill Wilton, I'm Terry Ruffalo.